always worried about making payroll, having enough cash to make payroll, and taxes, having enough money to pay our taxes. And if we're able to reduce our tax liability, we're reducing our expenses. If we reduce our expenses, we increase our profit and we keep more of that money in our pocket. And if there are ways to get legal deductions and move money from one business to our pocket and get a deduction for it on one side and not have to pick it up as income on the other, even better. Now, there are things that you have to do and you have to make sure you document. So just like everything else in life, nothing is simple. We all have to work for it, but it's not rocket science. We can all do that. So I think those two things really do cash flow. I know recently you had somebody else on the podcast and they were talking about, a tool for cash flow. And, everybody wants to know, okay, am I looking out 2 weeks, 4 weeks, 6 months? How can we make sure we can pay everybody? And this is one way to increase that cash flow. We have the home office. Most of us, especially post-pandemic, are spending at least 15 hours a week working out of our home office. That unlocks a whole deduction that we're allowed to take. The other thing that I see, especially when I'll have a CPA tell me, well, that's a red flag or it's going to create an audit risk or something like that, and which is totally unfounded. The other thing, and they're typically writing off the owner's vehicle. Now, when you have a home office, if you're traveling to another office, you no longer have a commute. So you're increasing the business use of your vehicle. So you're kind of killing two birds with one stone. You're getting another deduction, and that's really not decreasing owner's discretionary income because the money is going to end up coming back to you. And if you have a home office, you can have a home athletic facility. It doesn't have to be a $300,000 outdoor facility. It could be a home gym. I mean, we see people where they've built YouTube studios in their garage. And then you take that square footage of your office and your studio and you add that up, and maybe it's 20% of your total square footage of your home. And now all of a sudden you're writing off 20% of your electric bill, 20% of your real estate taxes, your maintenance, and all those kind of things. So it just all adds up. So we have the home office. We've talked about the home athletic facility. We have the commonly known Augusta rule, which is where you're allowed to rent your home to your business, and you can only do that for 14 days a year and not claim it as, income. The accounting law that comes out of the Augusta tournament down in Georgia, where they wanted people to be incentivized to rent their homes to the tournament players. So it's typically a 2-week process. So you rent your home for, $20,000 for 2 weeks, and guess what? You don't have to pay tax on that. So you're moving money from your business to your pocket.